It is episode 7, I believe, and this one's going to be on stop loss and take profits. This may be episode 8, episode 7, I'm not too sure, but this video is going to be about stop loss and take profits. This video doesn't have to be that long, so grab your popcorn if you need to. If you don't, you know what I'm saying, whatever you need to do, but so we're going to get straight to it. So, the basically how I trade, right? I use Fibonacci. I trade with the trend, and I love to throw out the Fibonacci. I throw the Fibonacci, fib, right? And the way I do it is not necessarily the way everyone else does it. You know what I'm saying? So I'm going to show you how I do it, my take profits and everything, and yeah, it's a very simple video. A lot of this is common sense, but I'm still going to have this video out there just in case someone needs that extra confirmation, right? But okay, so I'm going to be talking it basically using Fibonacci. When it comes to everything else, you're using structure or using whatever type of zone or whatever you want to do to take your own take profit and your own stop loss. But how I specifically do my stop losses is this, right? So let's say that I'm looking to take a sell and price broke structure and price is telling me that it wants to drop, right? I'm going to be marking on my fibs, and if you guys don't know how to mark up fibs, either watch one of my videos or watch someone else's video. There's hundreds of thousands of videos on Fibonacci, and I'm gonna enter, let's say right here on the 61.8, but where I'm gonna put my stop loss is at the overall high of the move. And the reason why I'm gonna put it there is because pricing come up here, and still be valid to drop. So what I like to do always, because I don't enter on candlestick confirmations, I usually enter on a live candle. And with that being said, uh, I'm gonna have to put price right here to give me a form of confirmation that of to increase the probability of the trade going in my favor, right? If this was a live candle, let's say I entered right here, but I didn't have any confirmation that price was done going up, right? Because this is the minor time frame uptrend, right? If you're trading this on a 1 minute, this is straight higher highs and higher lows, higher highs and higher lows. Even on 3 minute, higher highs and higher lows, right? So you don't know when this is going to be done and finished until it's actually showing you that it's done and finished, right? And it did, but it didn't do it until right here. So which gave you this bearish engulfing. But price didn't do that until all the way up there. So let's say that I had an entry right here, and I was like, all right, I'm gonna put my stop loss right here for 6 pips, and then I'm gonna try to catch from 1 to 7. Now you were right on direction, but you were on the trade because your stop loss is too tight, right? Because this is where the overall high is. So pricing come all even up to here and still be valid. So what I like to do is this: it may cut some of your risk rewards, but at the end of the day, it's all about consistency, right? Price ended up already melting all the way down here anyway if you would have held. So that's already a 1 to 8. You know what I'm saying? It's more about being consistent than catching one big move and home run. So, you want to have your trade at the overall previous form of structure. Now, price can even come all the way up here, wick, and then close below, but it doesn't happen that often. It does happen, but not that often to the point where I'm putting my stop loss like that or putting my stop loss like that and kind of chewing at my risk rewards. I don't need to do that. You know what I'm saying? So what I like to do is just do something like that, and you have a trade like this. Now, when it comes to take profits, I mainly kind of focus on market structure. I do use the fibs, but I want to look at morally on market structure because that's what's going to give me even a bigger risk reward or tell me when to cut the trade, right? So this is the 1 to 2 risk reward, and this kind of follows with structure right here based off this kind of support zone you have right here, right? So I'm like, all right, cool. This is a good level where I can take profit. Let's say that, I'm not a trader who likes to hold my trades out long. I like to be in and out of trades specifically in one session. So what I'd probably honestly do is either close up 50% of my trade right here and leave partials to run, or I'll just close up potentially all of my trade and hold the trade out and then I'll just cut my trade and just go to sleep or something like that. But what I usually like to do is look at market structure and see. So this would be TP1 right here, right? First form of like major take profit zone I'm looking at to take profit. And then another form of take profit would be at this level. And this would be like a 1 to 4, 1 to 5 risk reward trade, right? Because again, the higher time frames is telling me that price wants to go low. So for the most part, price should be smashing support zones, breaking those zones, and making those be forms to take profit zones because the momentum of the market should be able to break these zones because there's enough speed and momentum and force to break these minor time frame zones, right? These minor time frame support zones, right? You have one right here, you have another right here. And the momentum, it's what's going to break it. You know what I'm saying? And the stronger the trend, the harder the push. You know what I'm saying? So, you know, stuff like that. So you can use either Fibonacci or you can use both market structure and Fibonacci, however you want to do it. But you know what I'm saying? For the most part, I just use my fibs and I use market structure as well as a form of a take profit zone. And yeah, I just keep it super simple. You know what I'm saying? Very simple. You don't need to complicate this. You don't need to make this any more than what it has to be. You know what I'm saying? And perfect example, right? So this is the fib move for the downside, right? But unless you actually got in on a candlestick confirmation like right here, so what you see right here is like a tweezer top, right? You know what I'm saying? So you see the tweezers right here, right? So price is giving you that candlestick confirmation. This is actually a pin bar on another confirmation on the higher time frame, right? This is probably a huge pin bar. So you know what I'm saying? You have this candle right here. Let's say you enter after this candle, right? That's a candlestick confirmation. You can put your stop loss right above that candlestick confirmation instead of you putting your trade right here instead of putting stop loss here. Why? Because you enter on a candlestick confirmation. You can have a very tight stop loss and have risk reward like that, and you can catch it 1 to 5.86, 1 to 6, like that, something like that. But what I would honestly do, to be honest with you, is just enter in live candles. You know, I'll enter on the 764 rejection and have my stop loss right here. And price stops me out. Price stops me out. You know, I'm risking 1% on a funded account. Maybe I'm risking 3% on my personal account. I can afford to lose that trade. You know what I'm saying? I'm not losing no sleep if I lose that trade, right? It's all about risk management. I take 1 to 2 trades per day and I trade high probability setups that follow the higher time frames or maybe lower time frame structure if there's a risk reward trade for me. So as you can see, price pushes up to TP, to not TP, my third entry point, which is giving me the best risk reward, a 1 to 6 risk reward. I'm putting my stop loss here, 8.5 pip stop loss, and I'm putting it right at overall structure. I pretty much always enter on live candles. If I know the overall trend is a downtrend, if I know that structure is broken in my time frame, so when I know that price is pushing up, price should respect the previous form of structure because this is the overall high, and I don't expect price to go above that point. Why? Because structure is broken. This broke structure when this price created this new low. We had higher highs, higher highs, higher highs, higher highs, higher highs, and then structure wanted to break it. So when price goes up, I don't expect price to go there. There's not a high probability that price wants to break and create a new high after creating a new low. Doesn't make sense really. Can happen, but doesn't often happen. So with that being said, I'm putting my stop loss there. I can enter there with the aggressive entry, have a 2 or 3% risk, and pretty much catch a 1 to 6 risk reward, if not more, right? If I want to hold the trade out, and I can use structure, right, to get out right here, or I can just use my take profits and just hold my trade out and see how much I can get out the move. And this trade was a 1 to 6, and that's pretty much how I use my take profits and stop losses. Hope you guys enjoyed this video. Like, comment, subscribe. Hope you guys are loving these videos. You know what I'm saying? Stay tuned for more content.